Welcome back to Forex in 9 minutes, where I give you the sauce in 9 minutes or less. If you ever wondered about how to identify support and resistance levels, this video is for you. I'll explain how to find strong support and resistance levels based on price action. So watch till the end, and if you find value in this type of content, consider giving a like, subscribing, and turning on notifications so you know when the next episode is released. Forex in 9 minutes, let's go. Before we get into how to find support and resistance, let's make sure we're on the same page with the definition of support and resistance. Support is a price level where there are enough buy orders and buying interest to stop price from dropping any lower. You may have heard support being described as a floor. Resistance is a price level where there are enough sell orders and selling interest to stop price from rallying any higher. This can be described as a ceiling. Support and resistance should be considered a zone or area rather than a specific price. All traders in the market won't place their orders at exactly the same price where they expect price to reverse, but they often will be very close to the same area, which makes support and resistance levels better suited to be zones than a thin line. You can find support and resistance where price starts to reverse, and that includes retracements. In a downtrend, you'll find strong resistance at the lower highs and weak support at the lower lows. On the left side of the chart, you can see weak support being violated and strong resistance being respected. Weak support can be violated on a future retracement. As long as strong resistance is not violated, the downtrend will still be intact. In an uptrend, you'll find strong support at the higher lows and weak resistance at the higher highs. On the right side of the chart, weak resistance is violated by the next impulsive wave and strong support is respected. Weak resistance can be violated by a retracement. As long as strong support isn't violated, the uptrend isn't broken. An easy way to identify strong support levels is to use the line chart to find V-shaped reversal points. These points show where price came to a level, had exhaustion, and then momentum away from the level. The point of the V-shaped reversal, which is the support level, should not be violated in an uptrend. When these are violated, it indicates that a breakout and a possible change of the trend is occurring. The sharper the point on the V and the V-shaped reversal, the stronger the level of support. The H-shaped reversal can identify a strong level of resistance. The point on the H-shaped reversal, which is the resistance level, should not be violated in a downtrend. Like the V-shaped reversal, the sharper the point on the A, the stronger the level of resistance. The other important thing to remember is that support and resistance can change roles. When a level of support is broken, it often becomes resistance, and when a level of resistance is broken, it often becomes support. This occurs often, but not always. This role reversal behavior is the backbone of break and retest strategies. Strong support can also be considered as demand zones, and strong resistance can also be considered as supply zones. In the next episode, I'll explain the difference between support and resistance and supply and demand. So make sure to tune in to the next episode of Forex in 9 minutes.